How do you stop missing big moves because your focus was on another area? You got to use alerts. Hi, I'm Michael Martin. I'm a Los Angeles based stock and futures and options trader. Today, I would like to talk to you about how to use the technology to your advantage to save you time, money, and effort. Man, when I was first coming up and my account was underfunded, like yours might be, the worst possible thing would be like if I was in a stock and another one broke out to the upside while my other one was maybe up or languishing, wasn't making any money. It was awfully painful for me. The opportunity cost was gigantic. And I got very frustrated in that I couldn't keep track of all the things that I liked. I had to create a roster, if you will, of my starting five. And so first I was doing that by hand, and which is fine. I'm a visual learner. I like to draw things out. I keep notebooks. I got 45 pens in front of me. The idea, though, is that with the phone calls ringing, meeting with clients, there's a million things going on. It was very easy to not have focus because I was one person trying to do everything and I couldn't afford to pay anybody. And so I started to use the technology in my favor. How did I do that? Well, not unlike how you would enter a buy stop order, you can go to your whatever platform you're using and figure out how to enter an alert. And it's not terribly difficult to do. You find the ticker, it'll say create the alert, it'll say trade at or above the price, almost like a stop, or at or below a certain price. And then you click enter, and it stays there in the ones that I use, good till cancel. Now, it's not an order, right? So you don't have any financial risk. But let me give you an example. If you're looking at a chart and you only want to trade, say, cup and handles, you might need the security to appreciate to a certain level before you would be interested in putting on the risk. But it's still too far away for you to want to put the trade on is a good till cancel, right? Because the last thing you want to do is put in an order and then forget good till cancel, then forget that it's there. All of a sudden you get a trade alert. You're like, where'd this come from? Now I'm in a position, I forgot all about it. So what I do is I put in alerts, and that helps me manage all the inventory of the things that are kind of like on my wish list, but that I don't have orders for. So just hear me out here. This allows me to save a lot of time because I don't want to be sitting there scrolling through chart books all night, right? There's just too many names and we have too much money to be sitting there. You know, we go through screeners, obviously we use all that, but then from the screener results, you still have to go through. Again, if you're a discretionary chart reader or that type of trader, if you're not using a pure system, it doesn't matter because it just spits out the orders for you, right? No problem. But some of you might be, a little reticent to put in. If your accounts are underfunded, you don't have that much money, you might want to, use your discretion to figure out which trade that you actually want to put on, right? Which, of course, is a bias, which I've advocated against. But you're going to do what you're going to do and figure out, what's the best way, to handle this. For me, it was putting in alerts because it allowed me to babysit dozens of names at the same time, letting the technology do the work for me. Because then you could set it up so that it pops up on your screen. Oftentimes you might have the app. Some of them might allow you to do text. I don't have the full, Johnny Magori on all of it. But man, I can't tell you how many times that saved me because when you're going back and forth between futures and stocks, and then you might trade options on either one of those, it really helps you manage the inventory of what's on your wish list without having to put the orders in on the floor and have financial risk because there's just too many names out there. Now, some of you might be trading only one or two names or one or two instruments, so this probably wouldn't work for you. But at the end of the day, there's nothing worse than missing a good trade, right? And it's happened to me plenty of times, especially early on, because the technology really wasn't there in many ways. So, plus the expense of executing the trades was large. So it just really hurt. And like nowadays, you could trade on Robinhood for free. And even if you don't, the commissions compared to what I used to pay have compressed 99%. Like you got to understand how expensive it was to trade, even if you were kind of like an insider. In futures, I was paying 60, 70 bucks a contract for a round turn. Now, if you charge that to somebody, you get shot, right? Equities, you were looking at maybe anywhere between 2 and 3% of the investment as a commission. So you could buy 100 shares of McDonald's at like 45, 50 bucks a share is $150 commission. That's how it was. And no one really got a break. With the advent of the internet and these trading platforms, they've basically delegated the execution down to you, and also the liability of churning your account. Now you could just churn your own account, and it's up to you. So I would basically use those alerts to, manage my inventory of the things that I was looking at, but they weren't quite ripe enough on the vine yet for the picking, if you know what I'm saying. And this gave me great solace, because then I might be developing other ideas, right? Because not only do we have stocks, right, and futures, options on both, but in the future space, we also look at seasonal trades and intra-commodity spreads. So there's a whole lot of computer power going on at any given time. Risk management, really, because that's where we make and lose our money, right, in risk management, position sizing. So the last thing I want to be sitting doing during the day is like scrolling through screens of charts and uptiming and downtiming. Like, that to me is amateur land. The best thing to do is use the technology and have the technology do the work for you. You can effectively delegate it, and it's really awesome. It won't miss anything. It won't call in sick. It won't let you down. It won't be sitting there scrolling through Instagram on you. Like, it'll work exactly as you program it. And the ability to do that is a form of leverage in and of itself. There's not enough time for you to be scrolling through charts every day with multiple monitors and all that kind of stuff. It's much more efficient on your time and on your energy. Two, by putting in alerts above the market, right? So say you were looking at something that was trading like 21, 22, and you knew that you wanted to get long at, say, 25. So we weren't really there yet. You could easily put in alert at 23.50, 24, and just let it sit there, and it'll watch it for you. So you don't have to use the mental energy. This is especially good when you're in existing positions that you have to manage the trades on, right? Now, this helps probably for day traders and swing traders too, who are amply, funded and have more than, a couple $1,000, in that you get to spend a good chunk of your time maybe watching the chart intraday for the things that you are trading, but you don't have you can't go back and forth between like what's breaking out versus what am I trying to manage the risk on for the trades that I already have in my portfolio, right? So this is a real pro move that can help you, manage your time, manage your inventory, and try to keep what we call opportunity cost very, very low. Because if you're sitting there trying to manage a trade, even if it's a winner, you might miss the next best signal. That can be very, very painful. If you like this video, check out this one.